this is the final video. This will obviously be episode number 5. And yeah, this one's going to be about continuations. So, continuations is really important, okay? Because a lot of there's different like types of continuation entries that you can get. And first of all, what is a continuation? Well, there's only two types of setups, in my opinion. There's um, a reversal, which is like we've gone over that. That's like a QM, and obviously reversal is at like the extreme of each range. So yeah, that's pretty self-explanatory. A reversal. And if we're using this in a range and control context, which is what I always like to do, let's say we have the range time frame is here, and range is made a high-low. To trade the range expansion, well, let me just draw this out, and you probably already know this, but um, okay, so a reversal is getting this entry here and this entry here, and obviously that's going to be through QMs and other forms of accumulation and distribution. Okay, so that's a reversal, but we've already covered that. So a continuation in this example would be, let's say range is H1 and control is M15, right? Sorry about that. And after the reversal, these entries after are the continuation entries, in my opinion. There's only two types of entries: reversal and continuation, and we're going to be covering these entries right here. Okay, and to really understand these entries, it's better to watch the previous video so you can understand inducement. Obviously, once you understand inducement, it's easier to find continuation entries. The next step really is knowing when price will create the inducement. How do you know when price will actually do this before the fact? That's a different kind of lesson, different kind of topic. We're going to go on to one example actually of that today for the continuation. But essentially, continuations can be anything like the inducement trades, just the classic OTE trades, the breaker trades, the IOFEDs. They're all types of continuations, and I've actually shared some examples of breaker trades, IOFEDs in my Telegram. So go and backtest them, like because a lot of the trading industry, no one really trades breakers or IOFEDs consistently. No one really knows how to do it, and it's actually really simple. I'm not going to teach that, but I have given clues in Telegram, so go check that out. But obviously you can't just stick to the classic order block as your PD array, which is perfectly fine too. But anyway, so the first now we know what continuation is. Again, stupid simple. We're going to get into the continuation that I'm going to teach, and then I'm also going to touch on how I'd go about maybe trying to backtest these continuations and how to enter, and the safest way to enter if you're not really confident or you don't really truly understand continuations. Okay, so the first most classic continuation trade, AKFX has covered. He's kind of covered this. He's kind of not covered this. He's covered the idea of it, and essentially, if you can, I'm gonna try and before I say it, why do you think this low will get induced? I'll give you like 2 seconds to figure it out. You can pause the video, or whatever. Why do you think this low is gonna get induced? And the answer for that is you look left. This is resistance turned into support. AKFX has covered this on his channel. And if you get, and by the way, this has to be structure points. So our structure point was resistance. The next structure high low taps. Obviously, this would be a breaker entry previously, or mitigation block. Same thing in my opinion. Well, they're not the same thing, but they're used with the same rules. Anyway, yeah, this is classic support turn resistance or resistance turn support. Okay, and when price retraces back down, obviously this is retail SNR. So this is going to get taken, it's going to get induced because from a retail standpoint, they see this as resistance support. Will it be support again? They're trying to buy here, and obviously liquidity, blah blah blah, below this. And that's just a really simple, easy way to kind of know when price potentially will induce a structure point. If it is support turn resistance, resistant turn support, and obviously you look for a PD array below this, or you can look for confirmation below this. That's perfectly fine too. If this was M15 or M15, you'd be looking for M5, M1 confirmation in a, like, let's say an order block, or you can just take the order block as a limit order. It's totally up to you. It's a very good setup. It's very high probability, especially if we still have not met our drawing liquidity. Because if you're taking setups with liquidity, it's going to be a lot higher probability, because that is the whole well, that's not the whole basis of smart money concepts, but they are enhanced when you do use setups with liquidity, especially inducement like this. It's really going to increase your win rate, increase your probability, because even if you're wrong, a lot of the time you will get a bounce from these levels, and even if it plays into here and does sell off, you'll still get a bounce, you'll still get a chance to go break even, etc, etc. So, and that happens a lot when you enter with liquidity, so it's very good to do that. And yeah, again, hopefully this video won't be 20 minutes long. I want it to be really short and simple. This is the entire setup. Stupid simple, I know. And there are a lot of other continuation setups. I think I have about 7 or 8 continuation setups, and obviously this is one of them. Now, obviously I'm not going to teach all of them, but going into your charts, once you can identify your structure points, try and study when price takes this low. You know, we've just shown one example of SNR. And by the way, support and resistance, when I talk about SNR, I'm talking about retail support and resistance, because I do know that there are traders that do trade support and resistance, but the type that actually does work. AKFX trades support and resistance, and it's not the same as like SNR, like retail SNR. Just before anyone jumps on me about that. Anyway, so going forward, when you study your charts, try and figure out, or when you see a structure point get induced, note it down, take a screenshot or whatever, and try and get a lot of these screenshots and build up your data and try and figure out why price is taking out this low, or if it's in a bearish scenario, why it's taking out the high. Okay, try and understand that. Try and see, observe structure. What about this low is maybe weak? What is? Yeah, I'd say weak. What about this low is weak? Or yeah, that's all I'm going to say for now. And also with breakers, the examples I've shown in the chat in Telegram, try and study that. Again, I only use structure, okay, and liquidity and PD arrays and time frames. Okay, that's all I use. So just look about the structure. What about the structure is maybe different to a classic like OTE trade, for example, or yeah, I'd say that. Like, what about breakers is different about the structure compared to taking an entry down here? Like, what? Just go and look at the images and really think about it. It's really simple, and try and figure that out. So yeah, but anyway, going forward with continuations, let's say you're not sure if price is going to take out this low. The safest way to trade a continuation is wait for confirmation in these levels. Okay, wait for confirmation before you start buying and selling. Again, wait for like a QM on lower time frame, or some sort of other accumulation or distribution formation, because if you're not sure if this low is strong, for example, and you're just blindly taking buys, continuation trades are where you're going to take more losses, because inducement will happen more times in continuations. So it's just like a riskier place to enter. So yeah, wait for confirmation with doing that. But yeah, hopefully, like, this is literally it. This is all I want to show you, the most simple, basic, really high probable setup as a continuation. And I didn't really want to make it any longer than this. So yeah, I really think it's that simple, to be honest. There are a lot more, and I'm going to show a lot of continuations in my Telegram, so make sure to join that. I won't be explaining why specifically, but I will be sharing a lot of examples for you to backtest and figure out. But yeah, you don't even need continuations. Just stick to your reversals, as they are a lot safer in my opinion. Because like on a reversal as a QM, you're already playing the inducement, so you don't need to figure out if this low is going to hold. You're wanting it to take out, and then you know where your SL is going to be below this low. You don't have to try and figure out or whatever. It's a lot simpler, a lot easier. So yeah, going forward with the videos, I will be doing example videos. A lot of you have asked me to do that, and I'll do about 1 to 3 example videos, and then after that we'll do some live trades like ICT does. Well, not live, but like I'll record me taking a trade, managing the position, etc., etc. Maybe I'll do a whole session, and things like that going forward, because a lot of people have asked for proof and etc. But I think the proof is in the concepts. But yeah, I will be doing that going forward, and maybe do weekly reviews, weekly outlooks, blah blah blah, just things like that going forward. Just trying to reinforce the concepts and showing examples where price has really been nice. And I can also show losses, like I've said in previous video, if you want me to show a loss. And yeah, I'll do those things. Just let me know what you want, and hopefully this has helped. Let's see how long this video has been. 11 minutes, perfect. But yeah, really focus. The last thing I'm going to say is really focus on your structure, time frames, so episode 1 and episode 2. And when it comes to structure, really focus on identifying the correct structure points. Obviously that can be really hard at first, but just go through and after the day, if you didn't really understand it in real time, wait for the day to play out, go back and look at where price is respected, what levels it's respected, what highs and lows haven't been taken, and really try to, and that will show you the clear and obvious structure points. Obviously hindsight is where we learn from, so I'd say once you get good at identifying structure points, and once you get good at the relationship with time frames, really, yeah, you're good to go. Honestly, that's pretty much all you need, in my opinion. And on the last note, I will say, as a little hint or clue or whatever, regarding liquidity, there are only 2 types of liquidity that are important. And yeah, that's all I'll say. 2 types of liquidity, in my opinion, that are important. I guess all liquidity is relevant, but there are 2 types of liquidity that are very relevant, and that are the only ones I use. So yeah, again, I only use liquidity, structure, PD arrays, time frames, and I guess you could say time, obviously. So yeah, hopefully this little 5-episode thingy did help you, and I will be getting more videos out, and I will be really focusing on my Telegram now, putting in examples, trying to explain things on there, and yeah, that's pretty much it. But I will stay consistent on YouTube as well. And I feel like if I carry on, I'll make this into a 20-minute video for no reason. So yeah.